Andy, how's it going?
Hey, Scott. Thank you. Appreciate it, buddy. Hello, everyone. Yes, Steve got me the last minute here, but I do understand. You guys can ask him about it. He's going to get a new knee put in, so he had to go in for a last minute consultation. But anyway, um, you guys can give him a hard time. Anyway, hi, Waleed. Hey, guys. Thanks, everybody. Looks like we got a pretty decent class today. Well, it's not a class, a group today, I should say. Thank you for taking the time out to join me today. This is the Trade of the Week webinar. We are going to talk about the Trade of the Week, and I was able to put together some pretty cool back testing for you that we're going to do together. And this is going to be since it was kind of a last minute thing, I'm going to encourage questions. I'm going to it's an interactive, kickback, relaxed webinar, but hopefully we'll all learn something and you can take some knowledge with you as you leave. All right, let's dive into whatever Steve has next on his slides here, which is a disclaimer. All right, this guys, I'm going to be talking about some setups and we're going to be looking at some stocks, but just remember, we're doing this for educational purposes only. Nothing that you see or hear today should be construed as investment advice, okay? If you're seeking that, please look for a licensed individual. That could be a stockbroker, an RIA, somebody that took the required test. All right. You're not alone with trade ideas. Very good slide from Steve, because you're not. We have some incredible resources here. We have some incredible traders here that you can ask questions. We were talking about it in our meeting today. We get so much praise because of our support here and the quality of support that we have on staff. And we take pride in it. Guys, we do webinars every day, Monday through Thursday, in this same time slot. It's usually myself, Steve, or Jamie kind of juggling those responsibilities, but on Wednesday, you can come listen to our CEO Dan Merkin and CTO Brad Williams. It's a great Q&A webinar, and so learn some tools and some neat stuff, you know, coming around the bend. And then let's not forget our Friday support session. Okay, this is a scheduled 3-hour event. Usually lasts about 2 hours. People run out of questions, but that's okay. We hang in there till you're exhausted, and this is a straight up Q&A. Okay, so there's nothing on the docket as far as presentation goes. All right, you come in, you ask the questions, you're looking at our screen, and we can give you not only an answer verbally, but we can show you using our desktop sharing. All right, but let me not forget the Traders Room with Barry. Okay, this is a free service for everyone, even if you're not a Trade Ideas subscriber. We're confident you'll become one once you get in there and you see all the people that are using it and finding some great calls. But once again, get in there if you haven't been in there. This is free for everybody. All right, TI University, we finally cranked back up again this week after 2 weeks of doing our test drive webinars. And this is a live session every day at 12 Eastern. We start on Mondays with 101, and we graduate each day until Thursday. We end up with 401. Great place, guys, to come if you just signed up to Trade Ideas. You can, it's open for Q&A at the end of each curriculum is about an hour long, and we do open it up for Q&A. All right, but if you cannot make it, we do understand not everybody is a full-time trader. This is available on our YouTube channel. Okay, just go to YouTube, find Trade Ideas, go to the playlist, and you will see TI University about 4 or 5 rows down. All right, this is a slide that Steve is very proud of, man and machine combined. Okay, Paul Tudor Jones said, no man is better than a machine, and no machine is better than a man with a machine or human. And that is very true, okay? Trade Ideas is the machine. You are the man. Working together, you guys can accomplish a lot. And we're here to help you do that. All right, what's next here? The agenda for December 3rd, 2019. We're going to do the market recap, the AI recap. The TOW, don't let me forget about this. It seems like every time I fill in for Steve, I'm so used to my Thursday webinar that I forget to go over the TOW, and I have to scramble the last minute because somebody reminds me. But yes, the TOW, we'll talk about it. It is Zillow, it is live, it's triggered, and it's live, and we'll talk about how it's looking. And then an alert that I've shared in here many times before, at least a couple of times, built it probably 2 or 3 months ago. Random acts of violence, I'm going to circle back around to it because there was some great opportunity in that one today. And so I thought we would talk about it, how it's best used, and we're going to go ahead and back test it. We'll back test it together and see what it produces. So let me back out of this right now, and we'll pull up the old SPY and start talking about what we have going on in here in the market. A little bit so we can get a little more candles, bigger candles in there. All right, so this is what we're looking at. Okay, we talked about how we have been above this 10-period moving average now for, gosh, probably about a month and a half, guys. We've been above this 10-period moving average and could not close below it. Well, lo and behold, what happened yesterday? We finally got that close below the 10-period moving average, followed by a big gap down today. So what does this mean? Well, you know, it was the trade talks, you know, that kind of brought this down, but you can try to put your finger on any reason why. It's just ironic that the day we close below the fast line is the day we have a big gap down, probably the biggest gap down we've had, and about looks like 2 months. So there you see it. There is our little gap right there. All right, gap down. We kind of came over here, kind of held this level, bounced off of it, put in a little perfect little hammer there. So what happens next? Well, we will see. Okay, once again, this market has been a buy-to-dip market for a very long time. The trick is how far is the dip going to go? Are you going to have, you know, a move like this where you know, sell off maybe 5-6%, like you saw over here, or is it going to be short? Well, it's hard to tell. We're not sitting on a lot. I mean, we do have some you know, congestion over here for sure. It's kind of, let's go ahead and draw a little markup in the line right here where you can kind of see where we bounced today, right into all this congestion. But no major moving averages. We still have not come back and filled this nice little void there, small little gap right there. And guys, once again, I've talked about, we really haven't come back and tested this breakout that it took us so hard to get through right here. Now, people could argue, well, we saw 2 wicks right there, but yeah, but usually that's right after it went through. I really don't count that. I like to see it move up higher and then come back and retest. I still think that could be on the cards at some point, whether it's on this move right here, time will tell, but I still foresee some sort of test of this breakout. It seems like it definitely happens more times than not when you do get through here. Let's see if I'm missing a question here. I see some Mike's dropping some, Mike the comedian. And he's also dropping a stock. Yeah, we'll take a look at that in a minute, Mike. But there you have the, you know, we've been talking about there's no bearish case for the market. Well, I'm sure the bears were excited today, and I don't blame them if you get a move below the 10 and the 20, although we did close on highs. So we'll see what happens. They've had a history over the last 10, 11 years of being frustrated anytime you think the big move's coming. But time will tell. We'll have to see what happens. Let's pull up the Qs real quick. Let me get a drink of water. And I'm pretty sure that wick is not real. Anyway, if we drew the line right here, it would match up pretty much close to the spider, so I'm not going to spend a lot of time on these other averages. Diamonds, a little bit. Wow, diamonds. I'm trying to see which had a big impact today. Like I said, it's I don't follow the diamonds that much anymore. The Dow, it just seems like it's just so antiquated and old and 30 stocks. But yeah, that was a big move there. Let me see if no, it fought back. It was only down. Get the correlations here on the end, down about 1%. SPYs down less, and the Qs rounded out down about the same as the SPYs. So the Dow was down more today, but that chart you can see there. You know how I was talking about coming back and testing that move. Well, you can see what happened in the Dow. Did it perfect today. This is what I expect to probably see. My opinion is we could see in the spiders do very much like this, come back and test this level like you had today in the diamonds. Don't know when that's going to be. Don't know if it'll ever happen, but if I were a betting man, I would say chances are good, but we'll see what happens. All right, that's enough of that. All right, let's talk about Holly real quick. And let me go ahead and just pull this up a little bit here. We're going to go over. I'm not going to spend a whole lot of time on Holly just because, you know, it's kind of a ho-hum day. I mean, Neo overall did pretty good. You can see the breakdown here. Let's go ahead and start. Let's go ahead and start with the ones that didn't work. We always seem like we're focusing on the ones that work. Let's start on the ones that didn't work. Okay, we got a couple down here that fired, you know, pretty early, especially this AER from breakdown short. Let's take a look at it. And when this first went off today, I was thinking, wow, that looked pretty good. But I looked at it and I said, that's, you know, he uses an algo that's kind of based on highs and lows, and the stop is kind of configured in this algo. So, but I thought personally for me, the stop was a little bit too tight. You can see there when it stopped out pretty quick, and then rolled over. Did go to lows at some point, and then but popped back up. So really, that's was just kind of a mess, sideways sloppy mess there. Didn't work. And this one, pretty much the same way. Now I'm surprised this one. Now, since we created Neo, these are more designed for longer term, all day holds. So you're probably not going to see a lot of reduced risk. You did see it here in SGMO. But I was surprised maybe we didn't see it here earlier instead of going all the way to the full stop. It's a long time for the AI to be in a position. But I'm sure there was some things going over here on the technical and the dailies. For whatever reason, it did not do a reduce risk, and it did take the full stop. But getting back to tending the garden, okay, even though those two positions stopped out, we had a couple up here, especially this one right here, this ALDX, which was a beauty, and really got the most out of that. In conservative, it was up 286, so even in moderate, so it was 250. So really, the conservative outperformed the moderate, even though you held it all day. So that was aggressive. Yeah, that was actually a good timed exit there on this ALDX. Oh, it must have happened right at the close. No wonder. Just trying to see why there was so much difference in that. I'll go back and take a look at that. Another short, Kara, and there was some repeats in here. We had to have a couple of ELFs and ALDX. Michael will work on that and get it cleaned up. But let me take a look at Kara real quick. This was a nice one, okay? The size, but since the stop was kind of look at the stop on this one, it was 27. So I did not get a lot of size because my size is based upon stop loss. So this was actually, let's take a look at the winning percentage here. Yeah, you're looking at an 8% winning. So this was actually a beauty right here, okay? If you were using a different position sizing, in other words, not using based on stop loss like I did, and you were just coming in and buying a fixed dollar amount, this one would have been a much larger trade. Because you can see right here, only 95 shares, and if I'm trading this on my own, I'm going to be doing a lot more 95 shares of an $18 stock. That's just me personally, but Nonetheless, a really nice winning percentage right there. There is your buy sell order, and boy, all day long closed on lows. So that was a good one there. So overall, looks like Holly 2.0 had a couple of good ones in it, and Holly AI did not. Uh, not going to pull that up. You guys can take a look. Well, let me just go ahead and pull 2.0 up real quick, just in case I'm missing something really great in there. Okay, looks like this PD was a nice little trade there. There was your buy signal. No pain trade, went up pretty much all day to the close. That's what you call relative strength. The market was down all day. This one's tried to gap down, but boy, very strong. Good relative strength there. Finished up on the day almost 0.75%. All right, that's enough of that. Let me bring this down in here and let's go. I'm not going to forget the TOW. It's on the back of my mind. Speaking of which, boy, that was a tough one. The TOW the prior week, DXC. This one would have been a tough one. I mean, look at that. I mean, it did trigger, and look what happened this morning. This is just really tough, guys. When you get this kind of, you know, we had some trades on this morning, some long holds, quite a few of them, and to see, and I'm going to talk about this when I talk about the random acts of violence. To see a market maybe gap down 1% and then see your trades that you're in gap down like 1.5% and then just sell off down 3 and 4%. It's just, it's amazing. It's the kind of stuff you get in this market. And you can see here, there was no exception in this DXC, gapped almost all the way down to the 20-period moving average. And I know if you're in this, if you were in this, it's really hard not to sell on the open, but I try to make it a point anytime I'm in a swing trade and I have a stop, I pull it on the open, okay? Obviously, they're not always going to do what this did. This actually ended up finishing up 1.82%. But it is hard, okay? But theoretically, okay, if you are trading a stock off a swing trade investment, anything other than intraday trading, you really need to let the candle close at the end of the day. And I know it's hard for a lot of people. It's hard for me. You want to, what you say to yourself, you're taught if you have a stop, you need to stick with it and get out. Sometimes they know this and they can inflict a lot of pain on the opening. And you can see they're pretty much opened up at lows and all day long moved higher. It's tough. So what I would try to do is try to play the right position size, though, so you can, you know, get out on the open. I mean, people have different opinions when it comes to this. You know, Steve would probably tell you that, hey, yesterday was ugly. It closed on lows below its fast line. Get out. Nothing wrong with that, okay? If you're looking at a swing trade, maybe you're going to hold the stock for, I don't know, 7 or 8% move, and you're going to keep a tight stop around 2 or 3%. Hey, nothing wrong with that. If you're somebody who's looking maybe for a, you know, 12 to 15% move, and you're going to give it 4 to 5%, playing smaller size, giving it more wiggle and jiggle, that may have kept you in this trade today. So it's really hard to tell you what to do in those situations because swing trading is more relative to you know, your position size and your risk parameters, your risk management. So anyway, but a lot of pure swing traders will tell you if you're going to swing trade, you need to trade off the daily chart, not the intraday noise. It's hard to do. And sometimes you can be right by getting out. Sometimes you're going to be very wrong, like in this DXC. But regardless of whatever you choose to do, you need to stick with that plan, you know. But yeah, I always like to kind of pull them on the open, give myself a few extra cents, you know, for cases like this, because nothing hurts worse than to, you know, have the algo stop you out and just run up for the whole rest of the day. But nonetheless, let's move on to the next one, Zillow, which did not get close today. Okay. Uh, as a matter of fact, yesterday was an interesting day, and this was kind of the topic. If you got the email, I think Steve, he told me what he called this about something about the move before the move. Well, he was thinking about Zillow when he thought about this concept. Now, I'm not going to talk about his. Well, really, random acts of violence can a lot of times be a move before a move. But he was talking about, if you're trading Zillow, and you're looking for an entry, and you see a move like this early yesterday morning, come down, tag the 200-day moving average, and you get your bar reversal. Maybe you want to take an entry here versus being the one that waits for it to take out that high. Once again, it's subjective. Nothing wrong with either method. As a matter of fact, I'm going to talk to you today about random acts of violence, how these can be very, very good swing trade entries. Okay, contrarian. So I think that Steve was talking about, if you're looking at a trade and maybe you're eyeballing it for a reversal. I know Waleed sometimes does it. I don't know if he did this yesterday, but boy, you had a drive down, took out a couple of days of lows there, came down to the flattening 200-day moving average, and then bounced right back up. So I think that's pretty sure that's what Steve was referring to today when he talked about, or in his email when he talked about the move before the move. So in other words, a lot of times before you get that move that does complete the pattern, in other words, you have a bar reversal, a lot of times it may catch the ones who tried to jump in early right here, flush them out. There's your move before the move yesterday. Okay, so keep that in the back of your mind, because we do see that a lot. I mean, it's just the nature of the market these days with all the algos, and they're going to want to shake out as many people as they can. So a lot of times, watch for that move before the move. And once again, we'll talk about it a lot more once we talk about the random acts of violence here. But it's looking good. I'm thinking the trigger was, yes, do this high yesterday. So up yesterday, finished up 0.8% today. So setting up nicely here. Let me scroll out on the daily to see what we may be looking at. And looks like we are kind of still, if you look back, we're still kind of in a downtrend on the overall. So this could be one, if it pans out, could really be a big winner, but it needs to get it back above this level. But off to a good start. Okay, talk about relative strength. Picture in your mind the last 2 days in the spiders. You don't have to picture in your mind, I'll just bring them up. Here's the last 2 days in the spiders. Big down day. Okay, another not so quite big down day, just because of the bounce we had at the close, but still a down day. It's 2 consecutive down days. Now let's go back to the trade of the week, Zillow. Up day and an up day, and you had 2 big down days in the spiders. So that is what we call relative strength. It's back above the 10-period moving average. So everything is looking great on this one right now. Okay, so we all know that can change tomorrow, but I love when you have relative strength back above its key moving average, all of its moving averages. So there's a lot of good things to say about Zillow right now, except if we do look at the weekly. Okay, you will see it's not in a, it is still on a very long-term chart. It's in a downtrend. You can see the high going back over here around 65. But if you going back to the daily, it's above all its major moving averages on the daily chart. So that's good. And look what we have here. Big cup and maybe a little handle here. Okay, so very nice form right there. It's a beautiful cup and possibly a beautiful handle. So this could be a really good explosive pattern. If it does take out these highs over here, we could be looking forward to this gap right in here. We will see. All right. Now, let me get another drink of water here, and we're going to have some fun with the random acts of violence. All right, for some of you guys who may not know, have not seen this, let me briefly go over it for you real quick. I think you're going to really dig this. It's let's take a look at the configuration. That's the best way to look at what the chart is looking for. And Waleed, thank you. Yes, Waleed says he loves random act of violence, and he is referring to the scan. All right, let me click on the handy dandy hide unused, and let's take a look at the key metrics here. Okay, the price has to be above $5. Okay, this EPS is only a hack to filter out ETFs. And I'm sure most of you all know, all the regulars know this. Earnings date. So what I did here is I'm excluding all stocks that have recently had earnings, like last night or this morning. Okay, I do not want to be jumping in front of a bus if I'm trading these on some stock that had earnings last night and it's getting killed on bad earnings, you know. So I'm just filtering out all the stocks who had earnings last night or this morning. Score, composite rating. Okay, this is a score that we created. Takes in about 17 metrics, most of them technical, but we do have about 4 or 5 fundamental metrics in there, and it kind of gives it a composite score. It kind of rates the healthiness of the stock, mostly on technicals, but some fundamentals as well. So the minimum score has to be 70, which is not bad, actually. You know, I know Steve says 90s are A students, 80s are B students, but Steve didn't put this together, I did. So really, it kind of depends on where the market is, but really 70 is not a bad score, especially, remember, here's the key, change from close. I'm looking for stocks that are down 2.5% and they have a good composite rating, or not so bad composite rating, I should say. It's not great, but if it's down 2.5%, it means it's probably in the upper 70s when it came into today. Here's another important metric, relative volume. Has to be below 2. Okay, click on the show me button. The current volume is no more than 2. So in other words, I'm looking for stocks that are not selling off on huge volume. Okay, and a lot of times you'll see in the screen here that these things will not be doing any, you know, there. These stocks are getting hit on very low relative volume. That's not uncommon. Okay, algos sniff this out. They know there's no volume in here, so they can manipulate these stocks even more. And that's why a lot of cases you see you're in a position, you're like, gosh, the market's only down 1%. Why is this thing getting killed by 5%, or, you know, 4 or 3%? You know, hey, you can take advantage of those. And we're gonna take a look at some of these right now. And what I've done here is just pulled up. These are all the stocks that came through. I'm in a history of today. And let's just go back to about 9 o'clock. I really don't like to start looking at these till around 9. First 30 minutes is too early. So let's just go in. Let's take a look at this DISCA first here, since it is. Let me zoom in more on the, there we go. That's 8:53. Let's take a look at DIX here at 9 o'clock. See where this arrow is. And you can see the chart here, very strong chart. Big gap up recently, probably on earnings. Pull back here, was down at one time 2.5%. Remember, all these stocks have to be down. You can see the column here, at least 2.5%. There is your signal right there. Boom, nice little bounce, finished up much higher on the day. Now, one can decide if he wants to trade these on a day trading level or a swing trading level. We're gonna test these on a swing trading level, but I can see where these could be great little day trades too. Let's take a look at TRO. Beautiful. Look at that right there. I mean, even though it was below its moving averages, that's a big move. at the time, 2.5% at the open, drove it down for about 30 minutes. We got the signal here at 119.14, finished up almost $1.60 higher. All right. Now, not all these are going to work. I mean, some of them, like there's Morgan Stanley. I mean, it took a while. I was actually, you can see I had an alert in here. If I ever got the gap fill, I was going to be interested in that, but I never quite got it. Got about 20 cents away from me. Never hit it, but you can see signal around 47.59-ish, and not much, but definitely a move higher. Take a look at HIB. I think HIB took a while. I mean, there's your signal, but boy, never really, moved from maybe 15 cents below, and then you got to bounce up there. But that one right there, you did fill the gap on that one to right here, so I could see if somebody was interested at that point. This would scare me a little bit, looking to possibly fill the gap, down here. But throw me a little price alert in there. Anytime I'm looking at stocks and I see gaps, I'll go ahead and just throw it back. It doesn't hurt. I mean, you'll set it and forget it, we say, and then what will happen is sometimes maybe in the near future, next week or something, boom, it goes off and you're like, whoa, maybe you want to be interested in something like that. All right, let's take a look at a couple more here. AL, nice one there. Went down a little bit lower for sure, maybe another, I don't know, 15, 20 cents, and then finally got your bounce there, about 50 cents higher. And Citigroup, I think this one took a while too. Let's see. There's another, that's a good one. Citigroup right there. So you can see, guys, there's some opportunity in this. Now, there's a beautiful one right there, FLXN. Let's see what this arrow is. Man, that's beautiful. Look at that, right off the, this probably was coming through my, nope, I don't see it. Thought it may be coming through. I'll take that. Nah, it wasn't, not up enough. But anyway, a beautiful one right there. So what I thought today, I'm sitting there playing around with this, and I said, because I know in the back of my mind, I've done enough back tests to know what's going to be the most influential metric in something like this, okay? It's going to be the change in the SPYs or the change in the Qs, whatever you want to do, okay? It's going to have to do with what the market's doing, okay? Because if the market's way up on the day and a stock is getting crushed 2.5%, I don't know if I want to take a chance of that. I'm sure there will be some few good ones come through, but you in the back of your mind, you're going to say, wait a minute now, is this all algo manipulation? If the stock's up, the SPYs are up 1%, and this stock is down 2.5%, you definitely will see that in the early going, maybe the first 30 minutes. But if you see it an hour, hour and a half into the day, something's wrong. Something's probably wrong with the stock. So let's just do this together. All right, we're going to come in here and we're going to back test this. Let me just put this baby on real time. Not that I have to back test it, but just give you a fresh new real time alert. And bear with me while I get one more drink of water before I start this. Okay, so here's what we're going to do. We're going to back test this strategy. And bear with me if you're in here for the first time and I'm moving along kind of fast. I will definitely share this this cloud link for you at the end here. So already have this. Obviously, you guys know I probably played around with this a little bit. I was just come in here blind. Sometimes I do that, and it can be very embarrassing. But the start time, like I said in there, I don't want to look at these things until about 30 minutes after the bell. Okay. I'm sure you can catch some good ones in the early morning, but it's just dangerous. And so I would like, to maybe about 30 minutes, let's let it get some really good washing out of some people, and then that's when, hey, I'll come in and be a hero, hold up the stock. All right, timed exit. We are going to do this at the market open, and this is just going to be a 2-day hold. When I do a swing trade, I usually do tomorrow plus 2 days or tomorrow plus 3 days. And there's a reason for that. Main reason for me is Steve and I used to have a service where we called it swing scalping, and we would look for these setups, and then we would hit it and hold it for like 3 days and then just bail and be on to the next trade. Because really, I mean, you can look sometimes at a stock or the market and kind of get an idea where it may go the next 2 or 3 days, but anybody who telling you where they think the market is going to be a week or 2 weeks from now, they're trying to sell you something. I mean, really, after about 2 or 3 days, I'm just like, you're normally going to get some pullback, and then you don't know if it's just normal pullback or sellers coming in, they're going to drive the price down from whence it came. And but so for me, when I'm back testing, it doesn't mean I hold everything only for 2 or 3 days. But if I'm doing a back testing, I want to do it on a short time frame, because honestly, I have no idea where the market's going to be next week. I really don't know what it's going to be tomorrow, but I've seen enough charts where the trained eye can kind of get a feel. If this does this, there's a chance it may go here for the next 2 or 3 days. All right, so this one's going to be tomorrow plus 2 days. Now, risk management, I always use percent. Okay, it's more relative to the price of the stock. And I was thinking to myself, normally for a swing trade, I'll do like 3%. But I'm thinking, well, wait a minute. The stock is already getting hit by 2.5% when I'm seeing it or when I make the trade. So why do I want to give it another 3% on top of the 2? And something is definitely wrong if it sells off 2.5%, then goes down another 3% after that. So I'm just going to use half of that. We're going to come in here. We're going to enable a stop loss. And we're going to use 1.5% because I don't want to let a stock. I feel like I'm getting it on sale. Okay, so there's there's getting it on sale, and then there's going out of business. I don't want that going out of business price. So my argument is it's already down 2.5% today. I'm not going to give it another 3% because I'm buying it on sale today. All right. Not going to use a profit target. Okay, we're just going to hold this through the whole two days and exit the following morning at the open. Okay, yeah, guys, I'm not, let me know if you guys are having a lot of issues, if you're not hearing me okay. I don't have the fastest internet out here in the country, so let me know. Yeah, Mike, yeah, there you go. All right, advance, we're gonna open this up. Okay, Mike says loud and clear. Okay, everybody says I'm fine, Ashraf, so it may be something on your end. All right, we're gonna open this up and do a full 64 days back test, and these are trading days, so we're going through basically 3 calendar months, okay? So we're getting a nice big sample size. And take a look at the summary real quick, just make sure I did everything correctly. And let's hit simulate buy. This is a long, we're buying weakness. Which, by the way, in most cases, okay, you can get a better feel than what the alert price is, because the stock is coming down, you're going against the grain, so a lot of times you can even get a better feel than what the results are going to be in your back test, unless of course you're auto trading. Come on, odds maker. You can do it. There we go. Okay. You know what? I'm not even using commissions anymore because everything's going to go commission free. Okay, so now you're not going to see those 2 lines. You're just going to see 1 line. And guys, remember how we always talk to you about winning percentage is not the most important thing. It's your average winner versus average loser. Look at this strategy. It's only about a 36% winning percentage. You know, that's horrible. But because the average winner is much greater than the average loser, this strategy is actually making money with 0 commissions. But we're going to see if we can get it better. Okay. And because I know in the back of my head that, like I said earlier, the most influential metric in this is going to be a change what the market is doing. Okay, because once again, if the market's way up and these things are getting hit, something may be wrong. I don't know if I want to take a chance on those. But if the market's down slightly and these things are getting hit much more, there could be some opportunity there. So the first thing I'm going to do is optimize. Before I even go to my time of day and price, I'm going to go to other filters and I'm going to do change in SPY. And let me see if I can find it here. SPY change today. And we're going to optimize based on that. Well, look what we have here. I'm going to put an interval of 20 cents. I'm sorry. This is a percentage, 0.2%. And look at here. This is what I was talking about. When the market's down, look at these numbers. And look what happens as you get closer to the market only being down slightly on the day versus the market being up on the day. Beautiful. This is the kind of, what's the word I'm looking for? Basically, trend that you want to see. You want to see a steady, grouping of green versus a steady grouping of red. This is textbook. When you're doing your back testing, this is the kind of stuff you want to see. So what I'm going to do is right click in here. I'm going to set the max at negative 0.41%. Goes into my configuration window, calculates it for me. All I have to do is hit OK. And then guys, keep this in your back of your mind. You got unlimited back testing with premium. Anytime you make a change, just go ahead and back test again. Doesn't take long, just run it again. So you can see what impact did. Some people I see go in there and they'll sit there and go through 3 or 4 filters before they back test again. And really, you're going to be much better served by just go ahead and running the back test and then going back into the other filters. All right, look at there. This thing has gone up to, look how much better it's got just by adding the SPY filter. Okay, went from a profit factor of 1.4 to 2.51. Winning percentage all the way from 36 to 46, whole 10 points there. And the spread, even your winners got a lot higher. Okay, so the next thing I'm going to do is I'm going to go ahead and do price before time. Usually I do time, but I'm going to do price first, just because I always do. I like to mix it up when it comes to these are usually the 2 most important variables, but I'm going to mix it up a little bit. And really, the only thing as I'm looking through here, starting at $10, it turns pretty green, nice and green. We do have some red here and some red here that I could probably eliminate, but let's go down and see. Yeah, I'm not seeing a whole lot because it picks back up here with a lot of green. Yeah, so really the only thing I'm seeing is, yeah, I'm just gonna put a minimum of $10 on this. Set min to $10. Goes into the config window and does it for me. All right, let's run it again. I don't think it's going to matter that much in this one. Yeah, barely. 10.53. Now let's go and do time. Okay. Oh wait. The optimize time of day. I'm going to put it on 15-minute intervals just so I can catch every little groove here. And look what happens here. Look what you see here in the first 45 minutes. Okay. And then, even though these aren't that bad, the winning percentages are not that good. This is still far below what we have over here, 2.51. So what I'm going to do is I'm just going to use the first 45 minutes from 9 o'clock not the first 45 minutes, but a 45-minute segment from 9 o'clock, 30 minutes after the bell, and run it for 45 minutes and see what happens. Okay, let's take this little thing right here, take it to 45. Now, this is going to blow your socks out of the water, but there is a caveat to this, okay? But first of all, I'm going to say this: numbers do not lie, okay? If you had a $50,000 account, okay, and you ran this and bought these stocks, putting $3,000 in every trade, you would have made, over the last 64 trading days, about $11,143. These are real numbers. They do not lie, okay? Now for the caveat. This is the one thing I don't like about when you use a SPY filter. A lot of your trades are going to be just on a few days, because remember, the SPYs have to be down at least 0.41%. Think about all the up days that we have in the market, okay, or flat days, okay? There's a lot of them where you would not even, in this, if you are like auto trading this, it would, it wouldn't work. As a matter of fact, you're going to see about 30% of these on one day. I'm not crazy about that. You can see here's the day right here. If we go into the calendar, you're going to see this day right here was a 6,743. Now, these are real numbers. Had you been trading this on that day, you would have made this. But I was talking about with Michael Nosk, because I'd love to get this strategy into our swing trading, and maybe something, a variation of this, or something we'll get into our swing trading, Holly, because I think it's a great strategy. But I need to do something where, let Holly put it through the hopper to where we can use some other filters and maybe not get so much, out on one day. But that being said, there's some other good days as well. You can see here 11 out of 11, 21 out of 23. But this is all a product of the here's your 5 of 6, 5 of 5, 16 of 17. So you can see what happens, guys. On these days where the market tries to sell off hard, buyers are stepping in. It's a buy the dip market, and you can see why these trades are all working on these days. So that, that being said, I would rather use this. What I like to do with this alert, I think as long as we're in a nice bull market and people are buying the dip, this is a great strategy, okay? But what you got to be careful with, if you're trying to, especially if you're trying to auto trade something like this, if you're doing it in a market where the SPYs are really getting hit, it's a bearish tape for several weeks, and you're trying to do something like this, you can get hurt. But boy, the market we've had over the last several years, I bet you this thing would have killed it. So anyway, still some very impressive numbers, but that doesn't mean you can still, there are still going to be some great calls in this on days where the market maybe down slightly. I think you can take this, and I'm going to share both of these with you. I'm going to share the one that let me go ahead and do this one first. I'll do the basic ones, the one that you might just want to put on your desktop and see if you see some opportunity coming in. That's the way I like to use it. I like to kind of just get a feel what the market's doing and trade it discretionary. Did I copy all? Let me see. Y'all let me know if that's not the code. I think it is. And let me also share the long swing, the one I optimized. Axe swing. I'll call it opt. So you can play around with both of those. I mean, there's no reason why you can't, take out the filter for the spies, so you can get on the swing one that we had optimized based on time and price. I think the only two, yeah, that's the only two we really added, and see if you can find some opportunity. There's some great stuff that comes through there, but that's going to wrap it up, guys. I think I want to show you guys some other ways of trading other than just more contrarian, other than just looking for the momentum and chasing green bars everywhere. There's other styles, and you're welcome, Wally. Yeah, it's never easy to fly solo. But I tell you what, I am open. We have a few minutes here. If anybody has any questions or anything, chart or something they may like me to look at, I'll be happy to do that for the next couple of minutes before we bring Scott in. Okay, Jorge says, I just got here and missed the presentation. When's the next one? Well, Jorge, not all is lost because this will be recorded. It's being recorded. Okay, and you should get an email if you're signed up for our webinars. Okay, you will get an email invite for the next one tomorrow. It'll be tomorrow at the same time, 5 Eastern, and also you'll get a notification that this is available up on our YouTube page. And also, Jorge, if you just got here, I did share the cloud links in the chat window if you want to grab those. CG, what is the difference? Yeah, usually when you see something like this, CG, Silo group minus, versus a Zillow. Okay, I think Under Armour is the same way. You got UA and you got UAA. Usually it has to do with voting shares. Okay, one portion like Zillow would just be common shares, and ZG would be like voting shares. You have the right to vote on certain things when they come up. I usually go for the one that does the most volume, but yeah, the charts are going to almost look identical. Any thoughts on SRCL? Oh, looks good. Yeah, nothing wrong with there. There you go. You have relative strength today. Okay, market was down about 0.75%. This is up 0.5%. Above its moving averages. Looks like, yeah, that looks pretty good. Let me put on a weekly chart real quick. And yeah, you can see it's finally driving through this downtrend it's been in for a long time. So yeah, that doesn't look bad. I think if we can take out, it's already taken out this area over here. So you may be looking at this, 200-day up to 60, 69 or something, 68, 69, possibly. Go back on the daily real quick. Yeah, that doesn't look bad at all. So above all its moving averages, you got the 10. So looking good. As far as where I would not want to see it fall down is below this level right here. If you are long now, or if you're thinking about buying it, I would not want it to break through this congestion right here. Yes, William, that's the plan. We are going to have a Holly spin. We're working on it right now as we speak, as a matter of fact. Holly 2.0 will turn into a Holly swing eventually. No ETA on it. There's a lot of stuff to, to work on. You got to get the right strats in there. I would like a few more filters, like SPY filters, based upon not like change from day, but maybe change in 3 days, change in 5 days. I think that would really help when it comes to swing trading. All right, guys, good questions. And boy, that's going to, let's see, ETA on a different broker for Brokers Plus. Yeah, William, we're in talks with a few right now. I'm not going to bring up any names, but we are in talks with a few. But I'm sorry, no ETA. I wish I could give you something on that, but it's only a matter of time. All right, guys. Well, we're down to the last few minutes here, so I'm going to go ahead and bring Scott in. Thank you for your great attendance today, great questions. And let me pull back up and bring Scott in.
Yeah, thanks, Andy. Yeah, just a couple items on the way out.
Mm-hmm.
We got a series of ebooks that we released, and they're great. Andy contributed some chapters. Each book is arranged by topic and has 2 chapters. There's also cloud links in the book, so go to trade-ideas.com/setup, plug in your email address to get the download link. We've got a podcast we release just about every Friday, so stay tuned for that, and you can get ready for the next one by searching for Trade Ideas Podcast, wherever you listen to your podcast, and add us as a subscription. Also, scroll through the previous issues. There's some interviews in there that we've done in the past that are pretty good and worth pursuing. It's got a new code for this month. Holly Bells, all caps, lets you save 15% off the first month or year of Trade Ideas. You can also use this to do an upgrade. So if you're on standard and want to do premium, just go to the homepage, log in the upper right, and then click on the handy change subscription and use that code when you're filling that out. You can follow Steve Gomez on Twitter at Today Trader. We also at Trade Ideas. Facebook.com/Trade Ideas Pro is the Facebook page to like. And if you have any questions, email us info@trade-ideas.com. That's the best place to send all your questions. We will have a link to the recording of this up later on tonight or tomorrow, and you get an email address as soon as that's available. All right. Thanks, everyone. Thanks, Andy.
Thanks, Scott. Thanks, everybody. We'll see you.